Hey everyone, had a few requests for a video on weekend trading. So people that are working Monday to Friday and just want to do a bit of trading on the weekend. Um, so first thing I guess is to understand what it means to really be trading on a weekend, um, because they are sort of their own little ecosystem and different from the rest of the week. Um, so first thing is to be aware that weekends are usually about creating liquidity. So Monday to Friday is about taking liquidity from one place and moving it to another. So that might be a dip and then a pump, or a pump and then a dip. But basically, it's about moving, taking people's money and moving it somewhere else to profit from it. Um, but that money needs to be created. So quite often those positions are created or induced over the weekend. And that's why if you are trading on the weekend, you really need to be just trading on the weekend. If you try to hold over anything that you think is actually a trending market or something like that from the weekend, you're probably going to find that it gets completely undone the next week, and you get round tripped, or worst case, you end up losing because you entered too late and don't see it coming. Particularly if you're working, if you're working a Monday to Friday job and you can't pay attention to the charts, entering on a weekend, exit on the weekend, get the trade over and done with. That's it. So to trade within the weekend days, there's a few things. Like number one, you're probably going to be trading on timeframes that are sort of 1 hour to 4 hour max. You're probably not going to want to be looking at timeframes bigger than that, otherwise you won't be out of it over the weekend. And also, there's quite often just a lot of ranging done on weekends, because ranging is what induces liquidity. So when price sort of looks like it's going up, people will long. When price looks like it's going down, people will short. They're always just chasing what they see the chart doing in the moment. They're not actually looking at trying to predict what the chart will do next. So history always creates the future, and when it comes to charting, so you should look at where things have come from, and that will sort of give you a bit of an idea about where they're going. So on the screen here in front of us, what I've done is I've identified that these will be our weekend days. So I've included Friday because when it comes to trading the weekend for crypto, basically the weekend starts when the main markets close out on Friday. So that's sort of like the New York market. It closes, and after it's closed, then you are moving into the quote unquote weekend time, really. Algos and everything still operate over the weekend. There's just less volume in them. There's less volumes in the market in total. The order books are thinner. And like I say, they're either going to range, or sometimes you do just get those weekend pumps where they use the weekend thinness of order books to really push the price in one direction. So if you've had quite a boring week and liquidity has been built up during the week, then you can sometimes expect that the weekend's going to give you some kind of very violent move, because it's easy to do that when the order books are thinner. If you've had a pretty normal week where the price has sort of taken the weekend liquidity, and if it's um, gone and had a bit of violence during the week, then you could probably expect a little bit more ranging through the weekend. So those are kind of things you look at. You always look at the week before. So what we can see in here is we've hit this top during the week, which is the range rejection from back here, and we've started to push down into the weekend. We had this accumulation, which means we've got these break levels down at the bottom here, and we're in general going in an uptrend. So we're going to want to find that uptrend. So we map out the candles from here to here, and from there onto that one, onto that one, and to there. So that's our uptrend in the moment. And we haven't really established a local downtrend, just simply because we've gone blue-blue. We haven't actually had an up candle yet. So if we were to run into this exterior trend, we're probably going to get a bounce. And if that happened over the weekend, that could be our trade. Also, any of the break levels that exist down at the bottom of this 2 candle range, that could be our trade, right? And we've already hit that break level prior to going into the weekend. So you're probably going to get some kind of long. So let's jump down and have a quick look at a lower time frame. So let's go down and look at our 1 hour. Okay. So we've got what rejected us into the weekend up here. We've got what could support us down here, including the trend. Now we're down to a 1 hour, so let's have a bit of a look and see if we have a local trend on a 1 hour. So we do, it's going to be starting there, going there. Yeah. So that's our local trend. And got no hold levels in there on a 1 hour. We have got a backside hold level here. So that would sort of be a low point. So price might come all the way down to that. And if it does, we'd look to take a long. If we break over this 1 hour trend, we'd look to take a long. So then we need to see about where our break levels and hold levels. So we've got one there, got there, and then we're up to range retests at 175. If you don't know what any of this means, realistically, you shouldn't be leverage trading. And I know that sounds a bit cruel, but the thing is you can learn. So, come join us in the Discord or watch a whole pile of my other videos. I guess the outline to weekend trading is you still need to know how to trade, and you've got to understand that it's its own ecosystem with its own purpose. So you're in and out on the weekend, and you operate on these lower time frames. So, okay, I'm pretty happy with that. That's a decent amount of levels. I mean, if we really go for the top, we're going to be heading up to something like this origin level that's in here. Okay, so we've got all these. We know our levels. We know where we should bounce. We know where our trend support is on the daily, and we know that this is our weekend. This is Sunday start, so should probably, is that Monday? No, that's Monday. That's Monday open. You can also generally include most of Monday as part of the weekend. So Friday markets closing, which is actually about 8 a.m. UTC. So it's about here. So I'll just put another line on here. So Friday market closing. Up there. And everything else through there is what I would class as a weekend. And about 1:30 on Monday is roughly when your Asia markets open. So about there. That's the range that you want to play in. And let's get rid of that line here because it's still in the Friday market. Okay. And we'll get rid of that line. Yeah. So that's roughly where you'd want to play. So let's have a look and see. So if it's coming down here, and if it breaks this trend, we want a long, and then we want to take some TPs at the various different resistance levels as we go up. So we have just broken trend. So we're up about 172. We hit the hold level and rejected. If you were doing it on a low leverage sort of thing, you could start building a position here. But you really want to see the break level get hit or one of these lower ones retested, which is sort of down here at about 170. So let's see. So we've hard closed that 170 level, this break level down here. It's fine. Cool. Looks like we've come back to retest break level. So that could have been your first long entry, retest to the break level. And then you would look to take your TPs you actually would have already taken a TP. So this is effectively scalping. So you would have entered around here on the 170. You take your first TP on the back side of this yellow candle here at about 171. You put your stop loss at your entry, and if it rolls back over, you get stopped out, but you kept a little bit of profit. And then you see how far you can go. So you're looking for a close over this level on the 1 hour, which would be a breakout level that's formed in the 1 hour range. And if it closes over there, it'll likely continue to move up. Let's have a look. Yep, so up over the top. Initial rejection. Doesn't mean anything yet. Oh, back up over the top. Down. Nearly stopped out. It's created a hold level, so probably will stop you out. Tested the hold level. Yep, you just got stopped out. So now we've just got a little downtrend that started. So you made one scalp, you made some profit, and we are well and truly over that trend. So let's see. If we're looking for another entry, we have to work out where our trend is now. So let's see. So it went from there. Yeah. So now we're looking for a break of this trend rather than these ones. And to do that, we may have to come down to one of these lower levels to actually do it, because there isn't really much in here to hold the price. So let's see. It could still use this break level because it hasn't actually closed under it, but here it goes. Happy now. Yep, so closing underneath. We're still under the trend. Back up to the trend. Yep, back down. So you could be shorting these trends as well, just if you're comfortable with shorting. But I'd usually suggest, like, if you're doing this just for a bit of extra money on the weekends, you stick to longing, particularly when you're in a bull market. A low leverage long is generally a savable situation, whereas shorting can get pretty nasty pretty quick if you don't know what you're doing. Okay, so we're bouncing off this 1 hour break, and we're very close to the daily break. So we're moving into sort of bigger time frame territory as we come down here, and we should be able to get along anywhere down in here. And the longer we get down here, should be able to break these 1 hour trends. So because they're much smaller than daily levels. So that's bouncing on the daily break. We see it. It's hitting the daily trend. So we're looking for it to break out of these trends. As you can see, when it hits the daily trend, a lot more volume comes in. So you could have just taken the daily trend, and that would have been perfectly fine, or you wait to see it break on these 1 hours. So that's a first break of an interior. So you could definitely be looking to long now. See what we get. Yep. Now we've got a hold level to break the trend. So see, fight this trend. Still fighting it. Okay, we're up over, rejecting off this break level here, which creates a breakout level. So that would be the 1 hour level to close over if you wanted to then take a long or increase the size of your long. Back to the daily trend. Up through the daily trend. So you want a hard close. So we haven't had a full yellow candle hard close over that 1 hour trend yet. And now we have. Okay, so there is this break level here, which is like an internal range inside the bigger range, and that's your breakout level there, your origin level, stuff above it. So if we were to bounce off the break level, normal, once we get over that break level, if we get one yellow candle in here, you could just hit long. There we go. Okay. And it might bounce up and down a little bit, but you're going to have these higher targets now. Plus, we're coming off a daily, so this is sort of where you could flip back to your daily and look at it and go, okay, well, where would our daily target be? Realistically, although we're not completed the day yet, we don't have a daily trend, so we're probably going to target one of these higher levels, possibly even the high. This could go back over 184. But just bearing in mind you want to be out before the weekend, so at this point I'd just be holding it. So we just go back to see how far through we can get. You could probably look to see if you've got some 4-hour levels or something. So let's look, see if we've got a 12. It's always good to have some kind of target, but our 12-hour hold level's been hit. There is a 12-hour origin level there, 180. That's a pretty good target. From 170 to 180, that's a good target. There'd be a lower level in there at 173, something that's probably like a 6-hour level. So let's just get rid of some of these smaller levels because we've bounced off the daily. We've had a 1-hour reversal. So let's get rid of all this. And these smaller levels will still react, but they're just part of the bigger move that's developing. So I think those are pretty good levels now to be looking at. That one in there. So you can just take partial TPs, as it moves up. So go back and this point I typically get quite lazy and stop putting trends on, but if you ever see a candle about to close with quite a high wick on it, then you might find you should really check the trend because you could be about to reject off it. It might be moving it from the underneath to the top side to reject, so see if that happens like that. Let's see. Gotta love how the way price goes up and down. Where's our trend? Okay. Yeah, we're breaking this one and we're moving it there. So we might reject from here and come back to that hold level. So you could even just look to take a partial TP the moment a candle like that closes. But you're always better to take profits, particularly on a weekend trading times, than you are to not take profits. See. Yeah. See if we reject. It's built another hold level. So we did reject off the trend, but it's built that hold level and it's got this one down here. So it's got things in place to break that trend, which is happening there. And off it goes. So the trend moves. When the trend moves, it's got a very little wick on the top of it, so it's quite easy for it to break over that. Any candle that opens to the underside of a trend can reject, but if you've got hold levels that have formed, the rejection should only be to there or maybe to the break of the 1-hour range. So, but if in doubt, take profits. If there's big wicks, take profits. So that's hit one of those higher time frame TP levels now. So that's where you take some profit, and it's closed up over the top of it. I'm pretty bullish. This there. This doesn't actually break the trend. So this could be a sweep of trend and then a rejection. Yep, there you go. So if you're taking some profits at the higher time frame resistance and it comes back to one of these hold levels or even back to the trend, you could look to add the profits back in and compound them. Or you could just say, hey, look, I've had a great trade on the weekend. I entered down here and it was like 164. I've made it. You took it at that trend when you sort of notice the deviation, that's a $10 move, you know. So once you get proficient at this and you start taking a $10 move on leverage, you're making some very decent money. So let's see how this goes. Down, back to trend. So it may even come down here to target this lower break level. See. Back to trend. So you could have TP'd up there, added him back here. Back to test the trend again. So we're getting close to Monday market open. You would probably want to be thinking about just closing out now. You've had a pretty good weekend. You've identified where your supports and resistances were leading into the weekend. You've found a lower time frame trend that you can trace. You've followed that lower time frame trend down into the higher time frame support. You've taken along. You've had the opportunity to take profits based on 4-hour timeframes and trends, and you should really just be considering getting out now. Even if it does go higher, it's greed is what gets traders trapped. So we'll see, because this could potentially still go beyond all-time high. But hey, there'll always be another trade. So still holding the daily support. Yep. So you would have basically been round tripped on your trade if you'd kept holding this. So it's going down. Then typically what will happen is markets will open right there. And so when you consider what they were doing over the weekend, all of this, it's getting people to long. And this is what I mean by weekends are generally a trap to then create liquidity to move it somewhere else. And once you sort of understand that, you become very distrusting. But if everything from basically around this time frame here was designed to get people to open longs, chase the pump on various types of leverage all through here as the price is going up, a lot of them will have their stops down here under the break, thinking that's a nice safe place. And then as they move into the markets, they go and take everybody's leverage. Now it might go to all-time high. See. This is obviously now going through the week. It's not weekend trading, but there you go. So there was your all-time high. Trading over the weekend. You were trading while they were trying to create the liquidity. They take the liquidity through the week, but to up here, because there would have been a bunch of people up here that they could dump that into. So that's effectively trading a weekend. How you do it, what it means to be trading on a weekend, and the bigger picture of what they're actually trying to do over the weekend, and then how they will then do that, or what they will do with that through the week. So hopefully that helps you a little bit and just sort of steers you in the right direction when it comes to how to look at weekend trading. Yeah, sing out if you've got any other requests. Cheers.